Welcome, welcome, welcome to a session on getting you ready to pass the real estate exam. If you're not a member of the Pass Real Estate Community Group on Facebook, make sure that you check us out. The description or the comments box is going to provide you that link. You can go to Facebook, go to groups, and search for Pass the Real Estate Exam. On the other side, if you haven't yet taken the time to subscribe on our YouTube channel, we strongly suggest that you do so, and also turn on the notification alert that's going to let you know when we update videos there. We have two playlists. One is talking about the national part of the exam, and the other part goes for my friends located in Maryland getting ready to pass the real estate exam. Welcome again. My name is Brenda Kasuva, and let's get started. Our channel is constantly growing. My contact information is displayed. For those of us who are comfortable with scanning QR codes, you are welcome to do so by scanning the QR code on the right-hand side. You will be able to get my contact information. Today, the goal is going through financing. What am I hoping to accomplish? I'm not going to go through everything on the financing topic. I am going to focus on the regulations that come from the government to make sure that you, the consumer, are aware of not only what you're getting into, but also there's certain things that are required from the bank when they are giving you money towards purchasing the house. We shall review the TILA, Truth in Lending Act, also sometimes will be referenced to as Regulation Z. We shall go through RESPA, ECOA, which has to do with no discrimination from the lender side, just like the way we have fair housing on our side. And then we'll be talking about the role of CFPB and TRID that came about as a result of our market, for those of us who might have experienced it back in 2005, 6, and then 7, 8 is where things had to be tamed a little bit and disclosures were presented that we should be using. So we're going to go through that. When you are taking the exam, there's going to be 2 testing facilities. The major ones are PSI exams, and that one you're going to experience in 24 states. Maryland is one of them, and you'll know because when you are going to take the real estate exam, whom did you register the exam with, or who did you get an email from in order for you to go to take the exam? PSI is one of them, and they do provide this bulletin that you are able to use as your guide when you are going to study and making sure that you pass the exam. If you don't have access to this guide, definitely check out the description or the comments box. We definitely do make sure that we provide you that access on YouTube as well. We do have a video that goes through walking you through on how to access this particular booklet that breaks it down for you. On the PSI side, I'm biased because I'm in Maryland and we experience the PSI testing facility. We have 11 topics on the national side. Financing is one of them, and these are the topics or the content that is covered under the topic of financing that you should get familiar with. Today, my focus again is going to be on C, number 2, financing and credit laws and rules. That's what I'm going to focus on. You can definitely check out and have a more in-depth conversation by attending one of our exam prep sessions. We do have the group set up, and or we also offer tutor sessions based on your availability. Sharing the information here, what are the lender requirements? You need to know the differences between those loans. When do you get charged a PMI or mortgage insurance premium? A conversation that we shall definitely dig into at a later time. As mentioned, today our focus is on the Pearson VUE side, letter C, Truth in Lending, Regulation Z, TRID, number 2, and definitely going into number 3 and 4. In summary, what we're going to be talking about again are the regulations that come about when you are borrowing money from the bank. We start off with the first one, Truth in Lending Act. This one is referencing to you need to have a clear idea as to how much it's going to cost you. What do we mean? When you say you want to buy a house for $450,000, then what is involved in that? In your exam, this might also be referenced to as Regulation Z. Truth in Lending Act is the law itself, and then Regulation Z is how the government is going to be enforcing it. And what it entails, once more, is the true cost of borrowing money from the bank. What are the lender fees? Are there any appraisal fees to cover the person who's going to come out and find the value of the property? What will it take for me to borrow this money? Keep in mind, Truth in Lending Act and Regulation Z has to do with residential properties. So it's not going to be applicable, for example, on commercial loans. Under Regulation Z, then how will I know the true cost of borrowing money from the bank? Well, that's going to be covered with a disclosure. And what that means is when I go to the bank and I'm borrowing money and I'm using a property as collateral, I want to buy this house, and we used $450,000, how will I know an idea of the true cost of borrowing money? I will get what is known as a loan estimate, and I need to receive that within 3 business days of making that loan application. In review, remember that this is not applicable for commercial loans or business loans. This is on the residential side when I'm using a property as collateral to purchase. The other thing too is that when we buy properties, there are times when later on you might want to do a refinance, either to cut down on the interest rate or to cut down on the time or your monthly cost. When you do that, the Truth in Lending Act or Regulation Z does also apply, and you will be given 3 days to review the documents and see whether you want to move forward or not. How does this benefit you? Definitely an opportunity for you to shop around. You have the opportunity to rescind, and rescission is taking it back as it never happened. This opportunity is given to us when we are doing a refinance. The other thing that the Truth in Lending Act or Regulation Z covers is we have reviewed, it is tell me the true cost of borrowing. And how will I know? I will have a disclosure, that's the loan estimate. The other side too is before I even borrow money from you, the government is going to address the advertising that comes from the lender. When the lender is doing any type of financing, lender or bank, whatever word you pick, when the lender is doing any type of financing online, social media, on a flyer when you walk into the bank, a radio advertisement, once they mention what is referred to as trigger terms, and trigger terms is once they start mentioning the finance charges, what your down payment is going to be, how much your monthly payment is going to be, and so forth, then they need to disclose the true cost of borrowing the money. This is a sample that comes from Consumer Financial Protection Bureau. This is the loan estimate that you can go online and check out a sample for yourself. When you apply for a loan, this is something that that particular lender or bank is going to send to you. Most of the times it's via email within 3 business days of you doing that formal loan application. The formal loan application is normally once you have selected the house that you're interested in. What is it going to entail? Again, disclosure of the true cost an idea. Because at this point, we don't know whether we're going to get to the end when you get the keys. We are hoping that you are, but we need to make sure that one, you keep your income is going to be kind of similar or more. Your credit is going to be similar. So this is an idea estimate as to your cost, and it breaks down for you what your loan amount is going to be, your interest rate, your monthly payment just on what you borrowed, the principal and interest. And then it goes on to give you an idea of the estimated taxes for the property and the insurance. And then it goes on breaking it down for you in details. What is key here is that you're having the opportunity to review it, and then you're going to confirm receipt by signing the third page, and the lender now has shown that they shared this to you, and you have an idea as to what the costs are going to be. This is a good document for you, dear buyer, if you're watching this, to keep in mind, because this is what you're going to now compare at the final stage to make sure that the fees haven't drastically changed. The other thing that we also need to note is, thanks to CFPB and the regulations that exist, when the lender presents to you this breakdown of cost, there's certain fees that cannot change. So they're lumped into three. There's the one which cannot change at all. Here we're talking about something that the lender has control over. This is where if they were going to charge you an application fee or points or origination fee, that should not change from the moment you received the loan application, or rather the moment you did the loan application to when you got to settlement. So those are costs that should not change. And this is why the consumer is going to be comparing the two forms. And the two forms here, we're talking about the loan estimate and the closing disclosure, which we're going to review in a couple minutes. What's the next lump, or what's the next category or group of fees? These are allowed to change about 10%. So 10% is where the consumer has made the choice as to, for example, which title company is going to be involved to do that process, or where they are selecting someone who's going to do something on the transaction, whether it's the title work, the title insurance policy is going to come from a different company that is not affiliated with the lender. The lender usually will have an estimate, and those fees should not change more than 10% in that particular category. The last group is really beyond the lender's control. There's certain costs that go towards purchasing the house. For example, the buyer might want to do home inspection. You will definitely be selecting which homeowner's insurance policy you're going to get from which company. All of these are beyond the lender's kind of control in terms of the fees. This is all under tell me the true cost of borrowing. The lender, in addition to this, is going to be bound by the no discrimination law, which is ECOA, Equal Credit Opportunity Act. Just like we experience on the fair housing side, the lender is only going to be selective based on the income, based on maybe the assets available and credit score. It cannot be based on the individual and these protected categories. Here you're seeing some that you should have seen before, or you will see in the fair housing conversation. Race, color, religion, sex, male or female, national origin, marital status, and that one encompasses whether you're married or not, widowed, divorced, or separated. Guess what? Age is a factor here in terms of the lender cannot say no to you based on your age. I'm going to safely assume that you should be over 18, at least of legal age. Here, the age conversation is where I could be 82, I could be 92, I could be 106. I am still able to borrow money from the bank. And the last one is receipt of public assistance. That is still a legal source of income, so the lender is not able to say no based on the person receiving public assistance. The other thing that comes about with the Equal Credit Opportunity Act is where if they turn me down, because again, we want to make sure that it wasn't based on the protected categories that we just reviewed, then they need to tell me why within 30 days. I also need to have a copy of the appraisal when that is ordered. You as a consumer are entitled to that because anyway, you're the one who's going to be paying for that. The third law that affects the lenders from the government oversight is RESPA. This one is Real Estate Settlement Procedures Act. The word settlement is key because here we are talking about what we need to see that day of settlement. Settlement is another word for closing, or the day when everything is finalized. Usually this is when the buyer, for simplicity, buyers getting the keys and sellers getting the money that was promised. It affects any property that is less than 4 units that is residential. So RESPA affects residential properties that are less than 4 units. And what we are gaining from this particular law is the lender shared with us the true cost of borrowing. This one is talking about what is every single penny that Brenda shelled out or kind of contributed towards the purchase of this particular property. This is your opportunity that you will be able to review your credits and your debits on the closing statement as well. The idea for this particular law is why is it that we need to see everything that was contributed or paid for in this transaction is to prohibit kickbacks and referrals. Kickbacks is where I shouldn't be paying extra or referral fee for someone that did not contribute towards the transaction because they referred me to a title company or a lender. This is why the settlement or the closing disclosure is key. It will also address, there are companies that have a one-stop shop. So when there's a one-stop shop, that needs to be disclosed. That is referenced to as affiliate business disclosure, where if a real estate company is also coupled up with a home inspection, the company, they also have a home warranty company, they also have lending, they also have a title company, that needs to be disclosed to the consumer. And the consumer needs to be aware that they're not required to use all the other services to participate in one. What does that mean? If Brenda is a real estate agent, you don't have to use the company provided lender for you to purchase the house and work with Brenda. Since we're talking about settlement and again, almost echoing the true cost of you borrowing and getting the house, some of us, again, don't borrow money from the bank. So this one is going to cover any property that is residential, once again, less than 4 units. It's also going to tie the lender because most of us, when you're going to borrow money to purchase a house, the taxes and insurance are going to be part of your monthly payment. That's where the acronym PITI, you're paying towards the principal, interest, taxes, and insurance. If the lender is involved and they're going to be collecting that up front, there are also rules in terms of how much upfront cost they're going to collect to cover that particular bill, because when you get the insurance policy, the renewal date is going to be different from the next borrower. So they need to be planning ahead for that bill. And same thing for taxes. The tax bill is going to come out differently for every jurisdiction or state. So they need to plan ahead, and there's guidance as to how much can be in that account. If there's too much, then they are expected to refund it back to the consumer. How are we going to get the breakdown of the cost? Remember, the loan estimate is giving you an idea as to how much it's going to be. The closing disclosure is the one that the consumer is verifying what the costs are. Thanks to Consumer Financial Protection Bureau, here's a sample of that particular 5-page document. It is supposed to be signed by the consumer, the buyer, at least 3 business days prior to closing. This is helpful and important for the buyer to be aware of what the costs are going to be, also to review and make sure everything is as close as possible to the loan estimate. Remember, there are 3 brackets. There's the no tolerance, things cannot change, things can change within 10%, and then there's certain things that are beyond the lender's control. Very similar to the loan estimate, as you can kind of see. However, it's going to be filled out again with the credits and the debits, what has been paid, who's getting what, and who's supposed to be paying that particular amount. So you have the borrower side and you have the seller side, and this is something that the buyer will be signing on the last page to confirm receipt of this particular document known as a closing disclosure. And once again, that's being signed 3 business days prior to closing. That was a great review of the regulations. What is next for you is that we're going to challenge you to go ahead and take advantage of the resources that we have. If you haven't subscribed to our YouTube channel, this will be a great opportunity for you to do so. There's great content there. You've tasted a little bit of what is possible. Definitely dig deeper into that and subscribe. Set the notification alert for you to get notified when we upload videos, which we're striving to do at least 1 a week, which are offered twice a month, the 2nd Thursday and the 3rd Saturday. We also do offer tutor sessions as well. And for my family members in Maryland who are looking to get their real estate license, we also have a group coaching session that goes through the national part of the exam and also the Maryland that is offered on the 1st Saturday of the month. Here's how you can get all that information. You are welcome to scan the QR code or go to our website, brendakasuva.com. If you haven't joined our Facebook group or community page yet, go ahead and search for Pass the Real Estate Exam, or go directly to the website, facebook.com/groups/Pass Real Estate Exam. Until next time, continue the conversation on the comments, and we shall definitely keep in touch. Take care. That was awesome, right? You like our style? I look forward to helping you reach your goal of passing the real estate exam. We offer group coaching sessions on a monthly basis, and we also have tutor sessions that would match your availability. Show the love. Go ahead and subscribe. Put your comments in the video here, and we shall respond. Go ahead and like, share it with your friends. I look forward to helping you reach your goal of passing the real estate exam.